Welcome to the deep dive. Today, we're plunging into, well, a really surprising market trend. Despite some pretty significant global headwinds, the crypto market has turned decidedly green today, June 16th, 2025. It's quite a fascinating pivot. So our mission today is really to unpack these recent movements. We want to explore exactly why it's up, what might be driving specific coins, and, the broader forces at play. Everything from geopolitical events to some crucial regulatory shifts. We've pulled from a mix of current financial news, expert market analysis, and regulatory updates, all from today. So this deep dive should offer you a real shortcut to understanding the nuances behind those headlines. Okay, let's unpack this. So let's maybe start with that immediate snapshot. The crypto market has turned green, right? Nearly all top 100 coins are showing increases over the past 24 hours. I think, what was it, 98 of the top 100? The vast majority were up. But here's where it gets, well, kind of strange. Despite all this green, the overall crypto market cap actually dropped slightly by then top 9% to $3.45 trillion. And the total crypto trading volume, it's sitting at $76.7 billion. That's nearly half of what we saw just late last week. What do you make of that immediate contradiction?
Yeah, that's a great observation to kick things off with because it highlights something crucial. Not all green markets are, created equal. What's really striking here is how crypto moved against traditional stocks. Just on their previous workday, you saw the S&P 500 decrease by over 1%, the Nasdaq 100 down almost 1.3%, and the Dow Jones Industrial Average fell by nearly 1.8%.
Right. A pretty significant dip across the board there.
Exactly. And that broader stock market decline, and initially some drag on crypto too, was largely down to those escalating tensions between Israel and Iran, specifically Israel's subsequent attack on Iranian cities. But crypto has since recovered, which suggests a decoupling, at least for today.
Yeah.
So the key takeaway from that contradiction you mentioned is green market but declining total cap and volume. Well, it likely signals a highly concentrated rally, probably driven by a few major players or specific assets rather than, broad-based enthusiasm across the whole market. It's more selective strength we're seeing.
Okay, that makes sense. A selective strength. So what exactly drove crypto's recovery then? And that upward movement today, especially when traditional markets were, well, taking a hit. To really get that, I suppose we need to look closer at the big names. Bitcoin and Ethereum. Bitcoin BTC, it's showing a strong recovery, up 1.1%, and it's reclaimed that significant $106,000 level. It's standing at $106,734 as we're recording, after dipping earlier. Still climbing, trying to hold this mark, though obviously it's still a bit off its all-time high of, $111,804. What's really intriguing to me is Bitcoin's stability, despite some headlines, right? About retail giants, banking giants, maybe launching stablecoins. Some might see that as bearish for BTC. Why is it holding steady?
Well, it really suggests there's strong underlying support for Bitcoin right now, something that's currently outweighing those potential concerns. And speaking of strong support, let's pivot to Ethereum, ETH. It recorded the second highest rise among the top 10 coins today, up 3.2% to $2,615. It pulled itself up from an intraday low of around $2,494 and is now pushing towards that $2,700 level. Now, what's particularly compelling here are some recent movements we've seen with Ethereum's largest holders.
Ah, the whales.
Exactly. Just on Friday, SharpLink Gaming actually became the largest publicly traded ETH holder. They purchased a hefty 176,271 ETH.
Wow.
Yeah, and maybe even more significantly, these Ethereum whales, wallets holding between 1,000 or 100,000 ETH, they've seriously increased their exposure over the past month, added about 1.49 million ETH. That's a 3.72% increase for that group. And this was happening while smaller investors were actually selling during that price stagnation period.
Interesting. So big players buying, smaller ones selling.
Precisely. And one specific whale, we saw them scoop up 48,825 ETH at an average price of nearly $2,605, clearly taking advantage of that recent dip. When you see these large high-conviction players accumulating, especially when smaller hands are selling, it often signals their strong belief in a longer-term upward trend. It's a pretty powerful indicator of institutional confidence, actually.
Yeah, those whale movements are definitely something to keep an eye on. Okay, so beyond the majors, we did see some strong moves in key altcoins too. Solana, SOL saw the top increase among the big ones, up 6.8%, now trading at 156 cents. And tokenized exchange, TKX, a bit lesser known but still significant, it appreciated the most among the top 100, rose 12.8% to $32.36. Followed closely by SPX 6900, let's just call it SPX, up 12.4% to $1.65. But it wasn't all green, right? On the flip side, Mantle, MNT, fell the most, down 1.9% to about 62 cents, and Binance Coin, BNB, had the smallest rise, just 0.6% to $654. So still seeing some pockets of weakness even within this broadly green day.
Exactly. And that kind of diverse performance, it plays into the broader market sentiment, which interestingly is currently retreating a bit back towards the fear zone. It's still technically in the neutral zone for now, but it has fallen from 54 on Friday.
Oh, okay.
Now, if that fear starts pushing prices down further,
Yeah.
it could certainly create some significant buying opportunities, for both new and existing investors. But despite this general sentiment dip, there's a really fascinating detail emerging from Glassnode analysts about trader behavior.
Okay, tell me more. What are they seeing?
Well, they're looking at something called the delta skew for Bitcoin options.
Yeah.
You can think of it as like a gauge of how bullish or bearish professional traders are betting on Bitcoin's price in the very near future, like the next week or month.
Okay.
What's striking is that this metric has flipped quite dramatically. It indicates that traders are now aggressively positioning for significant upward movement, or at least volatility.
Aggressively bullish.
Yeah, the one-week skew, for example, went from being negative, which suggests bearishness or hedging, to a strong positive. Went from negative 2.6% to plus 10.1%.
Wow, that's a big swing.
It is. And the one-month skew showed a similar flip. Glassnode noted that this demand growth seems to be keeping pace with Bitcoin's maturation. They described it as an impressive sign of sustained investor appetite. So it suggests a really strong underlying belief in potential upside, especially from the professional trading desks, even if the broader retail sentiment is a bit shaky.
Okay, so the pros are betting on a rise. That's definitely interesting. Now, shifting gears a bit, beyond market mechanics and investor behavior, something truly seismic seems to be happening on the regulatory front. We just saw a groundbreaking global first, didn't we? Vietnam's National Assembly officially legalized crypto assets. That was Saturday, June 14th. They passed the law on digital technology industry effective January 1st, 2026. This new law defines, classifies, outlines management. It splits them into virtual assets and crypto assets. What does a move like this signal globally?
Oh, it's huge. It really signals increasing recognition and, importantly, integration of crypto into national economies. This kind of specific regulation defining things clearly, it's becoming more common globally. And frankly, it's a necessary step for crypto to move from the fringes into the mainstream.
Right.
We're seeing similar impacts from regulations like MiCA, that's markets and crypto assets over in Europe. Prezislav Krau, he's the CEO of an exchange, recently commented on this. He pointed out this kind of dual nature of MiCA. On the one hand, it actively attracts major traditional financial players into the market. It imposes necessary limitations, which you kind of need for crypto to really go mainstream.
Okay.
And it offers a level playing field, too, ensures all exchanges meet the same security standards.
Yeah.
That ultimately benefits users, right? Enhances security, trust.
So benefits like clarity, security, attracting big players. Sounds positive, but he said dual nature.
Yeah.
What's the downside? Because it sounds like there might be a significant drawback there, too.
There is, yeah. And Krall highlighted this quite clearly. MiCA inadvertently makes it incredibly difficult, actually almost impossible, for new, smaller crypto businesses to start from scratch today. Its requirements, the compliance burden, the capital needed, it can largely only be met by existing, large, established players. So effectively, this regulation, while bringing much-needed structure, it risks cementing the current market leaders and consolidating the market. It could stifle competition from innovative startups.
Race locks things down.
Exactly.
Yeah.
So while it's definitely a step towards stability, it does raise some important questions about, future innovation and maybe even the decentralization aspect of crypto.
That's a really fascinating trade-off to consider. Okay, so we have regulations evolving, trader positioning. Now, who's actually putting money into these assets right now? The flows into exchange-traded funds, the ETFs, usually give us one of the clearest indicators of institutional interest. And what they reveal, well, it seems like a fascinating contrast. U.S. Bitcoin spot ETFs saw substantial net inflows on Friday, right? $301.62 million. BlackRock alone pulled in a massive $238.99 million of that. That sounds like a pretty strong vote of confidence from the big players in Bitcoin.
It absolutely is. For Bitcoin, definitely. However, and this is the contrast, we see a starkly different picture for Ethereum. U.S. Ethereum spot ETFs actually break their 19-day inflow streak on Friday. They recorded $2.8 million in net outflow.
Net flows. after 19 days of influx.
Now, Grayscale did take in about $6.67 million, but Fidelity, another major player, saw $8.85 million walk out the door. So what this really signifies is a clear divergence, either in institutional appetite or maybe just different profit-taking strategies for the two largest cryptocurrencies. It's a good reminder that even among the big institutional investors, Bitcoin and Ethereum aren't always moving in lockstep. They're seen perhaps a bit differently.
Okay, that is a clear split. So bringing it all together, the million-dollar question, the one probably on everyone's mind right now, is this rally sustainable?
Right. Well, the short answer is probably yes. But there are some important caveats, as always.
Okay.
Look, this uptick is largely seen as a continuation of the rally that led to Bitcoin hitting that all-time high back in May. It will undoubtedly, I think, continue to see short-term pullbacks. That's just typical market behavior, right? It can even be healthy. However, and this is the big but, prices could be more significantly hit by any escalation in geopolitical issues. We saw how those tensions briefly impacted things earlier today, even if crypto decoupled eventually. Those global tensions remain a key variable. The market's ability to consistently decouple from them, or not, is really something we need to watch closely going forward.
Okay, so sustainable, but watch out for geopolitics and expect bumps. What a journey today. We've covered so much, from that surprising market rebound against the stock trends to the really distinct behaviors of Bitcoin and Ethereum, especially those intriguing whale movements we discussed, and then that double-edged sword of global regulatory developments. It's been a genuinely insightful look into today's crypto market dynamics.
It really has. And maybe a final thought to leave you with, building on all this interplay. Given this really complex landscape, geopolitical shifts, these major investor moves, the evolving regulations, how might these interconnected factors shape not just the short-term path for crypto, but its deeper role, its role in the broader global financial system in the years still to come?
Definitely something to mull over as you go about your day. Thanks so much for joining us for this deep dive.